Good day everyone, this is Viet from Axis Partners and welcome to my weekly Forex Outlook. Today is Sunday, the 28th of June 2015. This week has been a relatively quiet week for myself. I've taken two trades for this week. The first trade I want to talk about is the New Zealand USD 4-hour short. Now from last Sunday, if you remembered, I was mentioning that I was looking for a daily close below 68.70 support, and if that does happen, then I will switch to the lower time frame looking for a low risk high reward opportunity to enter short. So on Monday we did have that candle close below that. Tuesday, this is where I'd entered right on the open of this candle. Entry was at 68.47. I had a stop 69.37 and my target was 2 to 1 at 66.67, which is down here. Interestingly, and this is something that I really wanted to talk about, this is one of those few occasions where price action on different time frames were giving me mixed signals. On Tuesday night, after the daily candle has closed, I do my usual end of day market scan, and what I saw was this. Price action on the daily time frame has formed an indecision candle, which is a sign to tell me that possibly price is about to reverse. So with that in mind, I decided to keep a close eye out on the 4-hour chart, and I would exit my short on the first candle that would close above 68.70. Now, does that mean that that is an indication price would turn? No, definitely not. But for me, I want to short because I am anticipating that sellers are in control. After the candle that I've entered, put the arrow back for you. This is the entry candle. Buyers did try to push price up, however, the candles couldn't close above 68.70, not until this candle here. This was my exit signal. This for me is enough to say that my anticipation of sellers continuing to push this pair down is no longer valid. So the exit was taken, which meant I lost less than half of what I was willing to risk for the trade. Now, what has this pair done since then? As you can see, price has turned. We had two candles here where buyers took control, and then Friday's candle pushed straight back down again. It has closed below support once again, so there is a case to be made about going short. However, extra care needed to be taken. What I'm watching for is I'm looking for a daily close below 68.14. Once I have that, then I will begin to watch the smaller time frame, most likely the 4-hour, in order to find another good entry in order to go short. The key to trading is that you must wait and you must anticipate for opportunities where the risk is small and the reward is many times greater than the risk. If you take those trades, those setups consistently, that is how you make money. My other trade for the week was on the USD Japanese yen daily chart. This was a price action reversal after I saw indecision forming on what is very old level of resistance around 123.80 to 124.00. Entry was at 123.60, which is at the lower boundary of what I considered to be the resistance zone. Looking at price action, I decided to only set one single target for this trade, and that was at 122.80 for a 1-to-1 risk reward. Now, the first candle, the candle which triggered the trade, were in my favor. We had a lower low, lower high, and a lower close. However, yesterday's candle proved to be an interesting decision which I needed to make, because we had the Euro meetings going into this weekend. I didn't want to have any positions open in case market moves violently and you end up with big gaps in the market. So I made a decision to reassess this trade just 10 minutes before New York closed. This candle here, it had a lower low, but it also had a higher high, and my exit condition were that if price for this candle were higher than the open of the previous day's candle, that for me is enough to say that the case for sellers continuing to push price down towards my target is no longer valid. And so the exit was taken for minus 28 pips loss. I only lost half of what I were prepared to lose. So overall, 2 trades for the week, both were losers. However, I'm quite satisfied with how I managed the trade. Even though I had 2 losers, both losses combined together is less than what I risked originally for one of them. So very happy about that. The key to my success has been keeping my losers very small, and at the first sign that I can see from price action that the trade is no longer in my favor, I would immediately look for an appropriate exit. Let's have a look at some of the pairs that I am going to be looking at for next week. The first pair would be the Aussie Canadian dollar. Now this pair is testing once again the 94.10 support level. This support level has been in play many times in the past year. It was in December and numerous occasions in April, May, and most recently in the beginning of this month. So watching on how price is going to react when it hits this level. At the moment, support has been quite strong. So if I see indecision forming on Monday's candle, I would look for further confirmation from price action for a case to enter long on this pair. Next, we have the Aussie Japanese yen. This is the daily chart. This pair is also testing a recent support level, which is held off quite nicely, the 94.40 level. And similar to the Aussie CAD, indecision on the daily chart is a signal that I'm looking for in order to make a case for a long trade. But of course, I would always look for confirmation from price action that such a case is valid. And the final pair that I'm going to be watching for next week is the pound Aussie dollar. Friday has seen price pushed up very strongly. It has broken through the high of the previous 2 weeks and it actually closed above that. Above that, I have weekly resistance at 2.0840. So what I'm going to do, on the 4-hour chart, I am looking for a pullback to the 2.0500, which looks like it has been acting as recent resistance. Talking about this level here. So a pullback to this level would provide me with a low risk, high reward opportunity in order to enter long. Now, before I go through what are some of the economic news happening for next week, I just want to let everyone know that I am going to be away for 3 days next weekend. So you will not find a video update for next Sunday. Looking at the calendar for next week, I can see that there are a number of high important news coming out for the Australian dollar. On Tuesday, there will be a statement from the Reserve Bank of Australia. Wednesday, manufacturing PMI for China, which affects the Australian dollar. Then on Thursday, we have trade balance for the Aussie. Friday, retail sales. But interestingly, I've just noticed that non-farm employment change, which is previously known as non-farm payroll, has been moved from Friday up to Thursday. Don't know why that's the case. Maybe because they want to fit, because Friday is Independence Day for America, Friday 3rd of July. So that's why it's been moved. So that's it for me from this week. Again, I won't be able to make a video for next week because I'm away for a short vacation. So next time you will hear from me, it's going to be Sunday, the 12th of July. So until then, take care, and I'll speak to you soon.